Welcome to Wall Street Beats, everybody. I'm Steve Lamar. I'm joined by our technicals and momentum pro, Kevin Bakes Baker, and our small cap value, just master of all trades, Robert Marston. Welcome to the show. We're going to talk,
Jack of all trades, master of none. Jack of all, master of none.
Robert's had some pretty good calls lately with Abercrombie and
right.
What else are you going to talk about? Did you? I hope you didn't buy Nike last week before that I didn't fall into that value trap.
Yeah, no, I've been dumping on Nike for two years on this show.
No, you've been steadfast. To be fair,
we won't mention that the chart peaked up a little bit and looked a little good. Some of my colleagues were positive on it. We'll forget about that because that only lasted about a week. So,
how about? Are you still in Abercrombie?
No, you guys don't read my post, man. I do not deserve kudos for Abercrombie. Okay, so I have to share what I did. I've been talking about this.
Okay, so clear it up for us.
Right? You would think it's my biggest positions, but what happened was catching the falling knife is very challenging, as both of you guys know. And I realized, so I bought it at 100, down from 200. I sold it at 100 because I wasn't comfortable. I tried to get it 80. And I sold it around 81. Maybe I think I made $1 a share, less than $1 the second time. Bailed on it because I still didn't feel comfortable. And then it hit 70, and I started to say, well, now with the buyback, it's down to half of sales, and it's 3 times EBITDA. When all the other cheap stocks we were buying in this space, like Crocs and the other names, were 7 times EBITDA and 1 time sales, or 6 times EBITDA, and at some point, it represents a business, not a piece of paper with a chart. It represents a real business. So I knew if they just met guidance at some point, the stock would go up. So I actually called my broker on Monday before they announced their number, and the stock was down at about $1.50, and then suddenly it was down 3.5. And I said, "Shit, somebody knows something that I don't know. I'm not buying it this time." So I wasn't buying, and I'm flat, and I've been flat. It opened up at 100. Okay. I was unwilling to chase it at 100. It's 120 now. And I said pre-show I was going to do a comparison today between Nike and Abercrombie because they're two very different charts and very different businesses. And one stock is still very cheap and the fundamentals are not bad. The other company is, with the bad chart, is still very expensive and the fundamentals are poor. So if I were forced to buy a stock today, in a heartbeat, I would buy Abercrombie at 120 rather than Nike at 59.
Wow. Even after this move?
Even after both moves. Abercrombie is 2 times. Abercrombie is still 10 or 11 times earnings, 1 time sales, growing sales, mid-single digits. Nike, as a corporation, is not growing sales at all in, is trading for 30 times earnings and 2 times sales. So for me, if someone said, "Marston, you got to own 1,000 shares of either one of these," there's no doubt in my mind which one it is. So I think Abercrombie is still compellingly cheap if it compared to Nike, and the business is doing better too. Now, I am going to tell you what's attractive about Nike because I've been dumping on this thing since the show began. And honestly, I was short this at 150, and you know what? All the knuckleheads that kept buying it up and up and up, they frustrated me, and I covered my short with no gain like 3 or 4 years ago. Short. Go to a 5-year chart. I'll show you where on a chart I was short, but I couldn't win because Nike had this idiotic halo that people were paying 60 times freaking earnings for. Yeah, and I couldn't make a dime. So Nike did make $3 for 4 years in a row. And if they ever, the estimate now is $2. If they ever get back to $3, the stock at 60 is only 20 times earnings. For a mid-single digit grower with decent free cash flow characteristics, that's not a bad stock price. If it went down to 45, I'd consider buying it. But for valuation purposes, 20 times peak earnings, not if they get back there, not my not my favorite idea.
Yeah.
Favorite idea alongside, but I see people. I could see why people think with a 5 handle, it's an interesting long term turnaround candidate.
Okay.
And
So this one,
we all know turnarounds take a lot longer to happen than you think.
I
Just
was
because
just
you
about to
buy
say
the
this could take a
turnaround,
very long time.
just
Take a
because you
very
buy
long
the
time.
turnaround doesn't make management get smarter or the business conditions get better.
Exactly. Exactly.
Right?
So Bakes, what is the chart telling you?
I think this is the
Does this
curse
get
of
interesting at 45?
this is the curse. Which one, Nike or ANF?
Nike.
Yeah, Nike
Start with
is.
Nike.
I mean, look at this, and this is why I like charts so much. This is $50. It's a little slow today. Um, this is decent support. I don't think it breaks this, but this is the curse of Peter Lynch, in my opinion. Buy what you own. I like the shoes, so I buy the stock, and that worked for all of this.
Right.
Yep.
And I'm sorry, this is really slow today for some reason.
There you
Um,
go. That was
and I get it, but it just, but then things change, and Livy Dunn and Vuori show up, and On shows up, and sexier running shoes show up, and it's over, and they basically ticked off their entire distribution channel, and now you're paying the price, and so they bring in an insider, or elevate an insider to turn it around. And frankly, I have a hard time with people. Oh, the CEO hasn't changed it around. Have you changed it? How many multi-billion-dollar multinational corporations have you turned around, especially with the China exposure they have? So I think this is a nothing burger. I wouldn't touch this, and wake me up when it gets above probably 80. And I know that's 20 points, but I'll give up the 20 points to make the next 100. But there's nothing going on here.
Yep.
I mean, unless someone listened to the call and said, oh, there's a kernel of optimism in here, I don't hear it and I don't see it.
no, it's still not cheap either. So it's bad fundamentals.
And then you
with
have that.
with high valuations. That's the worst thing you could do, just to buy it because it had former glory.
All right, so let's look at
Now,
Abercrombie.
I want Bakesy's opinion of Abercrombie and Fitch, because I used an obnoxious term on a call that Bakes was on, and we were talking about Abercrombie, and it was $80, and I said I spit in the face of the stock market, Bakes. That's obnoxious, and that's arrogant, but that's what I do. That's my spiel. That's my thing. Okay.
You can be Jim Crow.
He said the market knows something. I know
all you want. I'm not doing it, but okay.
Sometimes the market. Well, there's many ways to skin a cat. I'm a dog guy. Okay.
Yeah.
I just basically, said, I don't care what the market thinks. The market's wrong. The market's not always wrong, by the way. I'm going to give you a little piece of
news. It's seldom wrong, by the way, in my opinion.
Yeah, I don't know about that. I'm right a lot more than the market is when I bet against it, so it can't be that infrequent.
Okay.
I'm not that good. But there's a stock out there. There's a stock out there. I talked about this show called SimilarWeb, right? SMWB. And I bought it on the way down at 8 and change, at 9. I bought it at 7 and change, and it's 7 today, 7 and a quarter. And the stock's just acting crappy. So you know what? I figure the company's got to be telling people stuff, right? So I look on my Bloomberg, and this week, they had 2 meetings, and the analysts lowered their numbers. So the market's not right, and it's guessing. The market is taking the company's below the radar guidance cuts and incorporating it into numbers. And the people that talk to those brokers are saying, oh shit, SimilarWeb's going to miss the December quarter. We got to sell. That's what's happening. The market is not infinite in its wisdom and sensing that the company is sending body language signals out if they're not outright telling people to cut their freaking numbers. Okay. So here, the market is right, Bakes, for sure, 100%. Okay. The key is to understand when the business is turned around enough for a really bad chart to have the next quarter or the second quarter out be a positive earnings surprise. And from that, it takes understanding the fundamentals and reading management's body language, in my opinion. So yes, the market's right, maybe more often than it's not, but it's not 90% or 95%. You could, take a look at Oracle at $350 versus today. Okay, what was right about that? That was just a stupid, response to a dumbass announcement from OpenAI giving them $6,300 billion that they don't have or can't ever get. So a lot there to unpack.
How many cups of coffee have you had today? I want to keep up.
Only my fourth, buddy. Now, since we were talking about turnarounds, I'm going to go on the record. I said I would talk about a nano cap. INTT is Intest. And I brought this stock up at 10. I did a starter position at 10 a year and a half ago one day. I turned around and sold it in like 3 months at 10 because I realized the turnaround was going to take a lot longer than I thought. But I bought this at 6 4 years ago, sold it at 18 to 24, made a fair amount of money in it. And I've been flatted for about a year, with including the flirtation I had for 2 quarters at 10. And it's 7 1/4 today, I believe. It's a small cap test and measurement company, process equipment, specialty niches they're in, and it's down a lot. It's been a bad business for a good 3 years for now, 2 to 3 years. The industry's been in semiconductor capital equipment for their end markets. It's been in a bear market, a recession, and two things have gotten me interested. So I bought about a 40% position in the stock at 6 and change, and in the last couple of months, and that is. They have 2 competitors, Cohu, COHU, which has doubled off its bottom, and they have another company called Antec Systems, which I circled at 4 I've owned it in the past 2 times and made money, but I circled it in the Trump tariff tantrum at 4 and change, and it's 12 or 13 today maybe. And it's up to 2 times sales, and Cohu's up to 2. The market is paying for the turnaround in the analog semiconductor capital equipment business right now. These guys have not done anything to distinguish themselves operationally. So the stock, this is behind. It's Cohu's one of its biggest customers. So if you look at COHU, the market's starting to pay for the Texas Instruments of the world, adding capacity. So if Texas Instruments and ST Micro and Infineon and all these companies make power management chips and industrial chips, those kinds of things, automotive chips. If you believe that part, that's the analog and mixed signal. It's not logic or memory. They're not in the sexy areas of the semiconductor market. They don't sell to Micron. None of these companies that I mentioned sells to Micron. None of them really sell to NVIDIA or AMD. They're just not in that business and never have. But if the other end of the semiconductor starts to pick up and the 2 stocks of their competitors are starting to pay for the recovery, this is just lagging for some reason. I think the company can exit 2026 at $1 run rate and be a $15 stock. So I think in less than a year it should be a 100%er. Now, how Intest trades after that, if they do this dollar, depends upon how effectively they grow from 27 to 29 and whether there's more upside. I don't know if it'll go back to 25, which is where I sold my last stock, but I do think that it has triple potential from 7 if they have a nice growth cycle starting with $1 next year and they get the earnings up to $1.50 or $1.60 in 3 years. That would probably get you $20 stock. So
Robert, I'm seeing 30 cents for 26,
yes,
2026. Are you at a
I
buck
think
for
I felt
2026 or
I'd be
further
at
out?
I'd be at 50 cents and exit the year at $1 run rate
All
for
right.
20.
All right.
I'd be at 50 to 60 cents and then $1 in 2027. That's where
All
I'm.
right.
And where does that put the stock?
I said between 15 and 20, probably. Yeah, between 15 and 20. Yeah.
And you think it's just a catch up to Kohu? It's
Catch up
its
to
biggest.
Kohu.
Yeah.
And catch up to ASYS if you want to see a really hot chart. ASYS is pumping 20% of its business that goes into the logic, the CPU business and GPU business. Yeah.
Amtech?
Amtech, yeah.
That's pretty.
I missed that. I missed that at 4, and I called up the company's external IR person. They wouldn't talk to me because I beat the crap out of another one of their clients' CEOs publicly. So they said, "Marcy, we're not good."
Your charm offensives still not working?
I was too much asshole, not enough charm.
Too much coffee.
I go by that day. My routine is supposed to be a charming asshole, but I was kind of light on the charm that day.
I love it. All
right.
So Marston, how about an update on some of your other names like Ceragon and Koru, that medical device company you like?
I think Bakesy, if you put up KRMD, it's a nice chart, but it's 5-6 times sales, so it's getting a little, fairly priced here.
Symbol again, please.
I was going to ask. So are you trimming some here?
KRMD. I have not trimmed any. I've told myself I want to hold this till 2030 before I sell a share. So unless it doubles from here next year, my goal is to KRMD. My goal is to hold it. You have to look at a long-term chart, and you'll see it's been at $10 in the past. So
yeah,
I would sell it at 10 on today's fundamentals, but 5.5. By the time I get done selling, it's going to be 5 because this is very liquid, and I have
that one got to that one had a 2 handle on it, didn't it?
Even, it got to. I recommended it 3 times with a 2 handle, buddy. 3 different times.
I remember. Yeah.
Ceragon, I'm all in. I'm all in long. I'm pounding the table long today. That's why you see my camera moving. Okay, it's $2.05. I have not done many pounded tables. I'm doing a pounded table long on Ceragon at $2.05.
Okay, you heard it here.
They had a shitty year for sure, and I just bought stock yesterday. I took my kids' accounts up to 10% and myself up to about 5%, which for a small cap Israeli company is pretty.
That's a big. Yeah, that's aggressive. That's aggressive.
Yes. So all in to pound the table, all in on Ceragon today.
All right, you heard it here, folks. We don't get many pound the tables from Mr. Marston. You got one today. Mr. Bakes.
This is 4 cups of coffee, Marston, today.
Yep. Actually, I was lying.
Bakes, pull up that Ceragon chart. Can you pull that
I'm
up?
doing it right now. I see it right now, and the volume is picking up, which I like. And
that's Marston.
264 is the next level where I think it gets some juice, and 284 is where it gets some juice. And that doesn't sound like much, but that's 30-40%. So if I was a small cap value manager, I don't know why the hell I wouldn't listen to Marston. I really
I agree.
You pick 3, 4, 5 names, and I think there's your outperformance, and you get to fight another day. I mean, it's not even close.
Yeah, look at Koru. Look at that one. Did that medical device company?
Yeah.
All right, Bakes. What are you looking at today? Anything on your radar?
I like to be intellectually honest, and I'm wrong on MSOS. When I bought a 10, this is cannabis advisor, pure U.S. cannabis, MSOS.
Cannabis trade isn't working.
No, it's not.
Or
And so I basically bought it at 10. It got to 12. I peeled that 2% off back down to 10. And when I see 15% losses on my statements, I shoot them. And I got, I can't tell you, I can't recall a time I regret doing it. I really don't. And I know that's anathema to many people, but staring at losses makes me sick to my stomach. And there's so much to
Get them off
do.
the page. Yep.
Get them, and then what do? At least me, I'll just speak for myself. Then the 80-20 rule kicks in, and I'm spending 80% of my time justifying why I'm right versus the market on this 20% of the position. So reclassifying marijuana. But the bottom line is, I thought there'd be some sell the news. I didn't think there'd be this much sell the news. And so, and obviously the Trump executive order doesn't address taxes and banking and all those other kinds of things. Scheduling is huge. Getting it from 1 to 3 is huge. And this might work at some point, but it doesn't now. And I'd much rather focus on uranium and silver and all the other things that are really working with this big long-term trends. And so I'm gone. And
Okay.
I'll take a 15% loss and go fight some other battles. Now that this is gone, I have virtually no losses in my portfolio. It took me years to get here. But being Old Yeller and taking it behind the barn and shooting them, it just works. It just works. So for me.
Okay. Marston, you don't trade them like that.
no,
15% down, you're probably buying your value.
no,
Micro
that's
caps.
that's not really correct. So I buy an unsustainable low valuation for the fundamentals. If the fundamentals deteriorate, the valuation deserves to be lower. I sell the stock. Yeah.
Right.
Yeah. Like I bought that Telebio, the hernia patch company, and they pooped to bed. And, normally I would blow it out with a 15% loss because the numbers were so bad. They were horrific, but they got a new, they brought in a new president, and he's supposed to walk on water because he built a company inside a division inside a company called Abiomed that's part of J&J from 25 million to 500 million in his tenure. And this business is 80 million run rate. He thinks it can go to 300 million in 3 to 5 years. So I'm going to give the guy a few quarters to see if he puts his money where his mouth is and delivers, upside, big upside sales growth. So I'm cheating my sell discipline there. And if the
Right.
stock goes to 50 cents and I sell it out at 12 cents, it will be a painful, hold, a painful violation of my sell discipline. It all depends. I've sold stocks the day after I bought them because the fundamentals deteriorated on an earnings release so badly, and I bought more of a stock that was down a lot because the fundamentals took a detour. I waited for them to get back on track where I thought there was visibility to be back on track, and I went all in with Surrogate. So there's two very different potential outcomes. Yes.
All right, Bakes, what else?
All right. I've mentioned this to
You're chomping at the
Charlie
bit.
offline, and he does not have a position here. I don't think. I'm not going to speak for him, but this is UBS. And I'm just struck by the fact that JP Morgan can't hit new highs and UBS does, and frankly, Citi does. And I hope he still owns it. I'll talk about it with him on his show at some point. But I mean, UBS is just getting some love. Look at this.
Yeah.
I mean,
Nadine's been all over this trade too. She hasn't said much about it, but
Sorry?
it's a big position. This is a big position for Nadine.
Oh, fantastic! I have not talked about it with her, but it is the Morgan Stanley of Europe. I kind of hate those phrases, but wealth management gets multiples, and the UBS wealth management business is pretty well regarded. and it just the Credit Suisse deal was a steal, and it's working. It just flat out is. But I guess my main thing that I don't know my main thing, but the fact that J.P. Morgan is stalled out here, and it's not. I mean, it just hasn't hit new highs. I mean, that's just the conference call was as dour as they usually are, and Diamond is as dour as he usually is. But J.P. Morgan is, I think that was the safe stock to own for the last 5 years, frankly. And now they're saying, okay, I can buy some UBS and I can buy some Citi, and that's where my performance is going to come from. And so I got one more if you have some time.
Yep, we got 2 minutes.
Okay. I'm sorry my system is so slow today. This is ProShares Short Bitcoin ETF, BITI. And, if I didn't tell you what it was, you'd say, okay, that's a falling knife that it looks like. Look at this thing, okay? This is the weekly, and here's the monthly.
Look at that volume. That thing's catching a bid.
You know what? I mean, sometimes making this simple really works, and I'm just intrigued by, do the precious metals gather what crypto spills? And I'm watching, silver. That's been working. That calls has been great for me, and it's hitting new highs today. At least when I jumped on the call. But I mean, this is Luis Yamada kind of stuff. That's a base, that goes back years, and I've been talking
Ben's
about
on this trade. Ben's on this trade too now. I think as of last week, he's short Bitcoin.
Yeah, and MicroStrategy is rolling over, and if you get to the point where MicroStrategy is a forced seller, I don't think that's likely anytime soon. But I'm doing more work on it. But the fact that there's a seesaw, and when crypto goes down, precious metals kind of get a bid, and digital gold is losing out to real gold. And real silver and real platinum, which are acting really, really great. So we'll see how this plays out. But, the market is telling me that, you want to be on the short side of Bitcoin. And we've been talking about it for a while. And, I like to have Ben. I tend to make more money when I agree with Ben versus the other way. So,
okay.
No, I'm serious. I think he's one of the. I think he's one of the brightest guys that I've met. So,
well, don't tell him that. All right, boys. Do you want to wrap it up, Mr. Marston?
Keep smiling.
I'm good.
Have a great weekend, everybody. Thanks for joining us on Wall Street Beats. You can follow us on wallstreetbeats.com and on passes.com/Wall Street Beats. We'll see you back here on Monday. Have a great weekend.
Take care,
guys.
folks.
Last Friday before Christmas. Thanks, guys.
Merry Christmas. Happy holidays. Jen, thank you.
Thank you, Jen.